in a C neighborhood, we did 10 duplexes. And so my partner at the time, that was going to be a JV on that deal, said, "Oh, all right, so this is how we do it. We kick everybody out, and then we go in, we fix it up, and then we sell it off or we rent it out." And I said, "Well, why don't we have to kick everybody out? Let's just leave them in place. We fix up the outside, put them in extended stay while we're doing the inside. Took us 6 weeks to do the inside. We put all those people back, stabilized the asset, and then when I was going back to take video of the asset, an old lady came off her porch. She was probably late 50s, early 60s, and she says, "Are you GLH?" And I said, "Yeah." And she says, "Are you Karl?" And I said, "Yeah. What do we screw up?" And she said, "No, thank you for changing the community."
All right, guys, welcome to another episode of The Report. Today, I got someone who specializes in affordable housing. He just picked up 2,000 vacant lots in the city of Cleveland to build out affordable housing. I got my man, Karl Gorman. Welcome to the show, Karl.
Thank you, man. Thank you for having me. I'm a big fan of yours. So before we get started with anything, I just want to say thank you for having me. And I've watched your success and you grow and keep doing what you're doing, man.
I appreciate you, man.
Yeah.
And I didn't know this until you came in. We were chatting before we started recording today. And my good friends, Craig and Matt Floyd, who have also been on the podcast in the past, they manage some of your short-term rentals out there in Houston.
Yeah, absolutely. Shout outs to them, man. They are one of the best management companies out there. So absolutely, they do a fantastic job on short-term rentals.
Love them, and I've heard them throw out your name before, but it didn't go full circle until you came in today. I'm like, okay, now it all makes sense. That's cool, man. Love them. Shout out Craig and Matt.
Yeah, for sure.
So how did you get into the affordable housing thing?
Yeah, so real estate was my second career. Is like what I like to say is I've spent 20 years in corporate America. So I was vice president of sales for a couple of the largest financial institutions in the world, doing very, very well as a W-2 employee. But as you and I both know, W-2s get taxed at 50% if you're doing pretty well.
Mm-hmm.
So 10 years into that trajectory, I figured out that, I needed to create wealth. I had a mentor who is still my mentor today. So 20 years later, he's still my mentor. And we started doing real estate. And the first deal we did was a syndication deal. We bought a $90 million property in Minneapolis, and he told me that in 7 years from now, he would give me my $250,000 back, and I would make $250,000 on that transaction. And a course of the years, he'll give me a 10% dividend. Well, what happened was 3 years later, he gave me a check for $500,000, and just last year we just stopped getting dividends on that transaction. So that sped up the trajectory of like, all right, how do I do this more? And how do I get into real estate full time?
Yeah, I think the power of those syndications at scale, if done correctly, can, obviously you want to go into these opportunities and be conservative with your assumptions. I always say, under promise, over deliver. And it sounds like 100%. That's what happened with your offering there.
100%. And then we took that and we did a 1031 exchange. We bought a couple more, but that really opened my eyes to what wealth could possibly be. And so I started doing on my own some hard money loans, and then we did some flips, and we did in Indianapolis. I know you're familiar with the Indianapolis market, but we did. Mm-hmm. In a C neighborhood, we did 10 duplexes. And so my partner at the time, that was going to be a JV on that deal, said, "Oh, all right, so this is how we do it. We kick everybody out, and then we go in, we fix it up, and then we sell it off or we rent it out." And I said, "Well, why don't we have to kick everybody out? Let's just leave them in place. We fix up the outside, put them in extended stay while we're doing the inside." Took us 6 weeks to do the inside. We put all those people back, stabilized the asset, and then when I was going back to take video of the asset, an old lady came off her porch. She was probably late 50s, early 60s, and she said, "Are you GLH?" And I said, "Yeah." And she says, "Are you Karl?" And I said, "Yeah. What do we screw up?" And she said, "No, thank you for changing the community." And I said, "What do you mean by that?" And she says, "Well, this used to be a food desert." I had no idea what a food desert was before.
Yeah, what's that?
Food desert, basically, there's no access to fresh fruits and vegetables. So they don't have a grocery store. So the people in the neighborhood are eating from McDonald's or a liquor store. But because of what we did, They have ownership of that neighborhood. You have a local grocery store that's moved in, a local bank that's moved in. There's a community center now that's opening up. And we really like revitalized the community. And so I got back to my guy's truck, and I'm FaceTiming with my wife, and I said, "You won't believe this." And she's like, I know, you made a lot of money. And I said, no, I made a lot of money, but I also made a difference. And that is what sparked affordable housing for me in this country.
Yeah. I love that. And I also love that you guys didn't kick any tenants out. I don't believe in kicking tenants out. People are always like, oh, why don't you go buy apartment buildings to operate as boutique hotels? And it's like, well, there's many reasons I don't, but one of the main ones is I don't believe in kicking people out. Right?
Yeah.
So I love that you guys did that.
Yeah, man. I didn't even think about that. I was thinking about, why wouldn't you go buy apartments and do the boutique hotel play? But that does that displaces people and affordable housing right now is a big buzzword. I mean, it's there's a lot of people out there that don't have homes.
So what exactly does affordable housing mean?
Yeah, so that's a good question. So there are a lot of cities, there's a lot of counties that will work with developers that will either give you a tax credit, a tax abatement. They will discount your land purchase, the acquisition of the land, so that you can build affordably. It's not necessarily affordable housing, right? Because it's not necessarily we're building Section 8 homes. That's not what we're trying to do at all. We're trying to build nice homes. We're trying to give generational wealth to people that live in those homes, and we're trying to do it at an affordable price. So my whole thing is in order to build wealth in this country, and then I'm not talking about the Grant Cardones, who I'm a huge fan of, and other people like that don't believe in buying their homes. I'm talking about the people who are not financially savvy, that are living paycheck to paycheck. In order for those people to have financial freedom in life, I think they need to buy a home, and then to be able to pass that home to their kids upon their exit or their death.
Yeah, I agree. I mean, I say this all the time. I think the for sure way for most people to build wealth is to get into home ownership.
Yeah.
FHA loan, 3.5% down. Better yet, do a house hack, buy a fourplex with 3.5% down.
Yeah.
Rent the other units out.
Right.
And over time, that thing's going to pay itself off.
Yeah.
And over 15, 20 years, that thing's probably going to make you $1 million.
100%. 100%.
But with that, so you got Section 8. What exactly is Section 8?
Yeah. So Section 8 is a law that is established by the state, established by the county, to help people that are in the homes afford them, right? So some of your monthly rent or mortgage is coming from the government. It allows people that are struggling, that are not making a lot of money, to be able to qualify for these subsidies that allows them to have access to home.
Got it. And does that come from the taxpayers in the given municipality or city?
It does. Yes.
Okay.
Yep.
And so you mentioned a couple of things. You mentioned, a discount on property taxes.
Yeah.
Are those incentives mostly for the builder developer, or do those flow through to the homeowner when they actually purchase the property?
So the way we negotiate it is both, right? So if we are in a situation with those 2,000 lots that we can't sell them, then we can keep them and rent them, and we then inherit the 15-year tax abatement.
And that means no property taxes?
That means no property taxes for 15 years.
Wow.
Yeah. Crazy.
That's powerful.
Right? Very powerful.
And especially I think in Ohio, I own a couple multifamily properties in Cincinnati. I know property taxes are not cheap out there.
Yeah. And not to get into the weeds of it, but these particular lots that we're buying or that we've bought and that we're building on are in nice neighborhoods or nicer neighborhoods, right? So they're in the B class neighborhoods. And so they have access to now public schools that they didn't have access to before. And some of the things, the amenities that comes with that neighborhood, they have access to because they're able to again afford the house and not pay these tax the property taxes on the properties.
Okay, and I believe you mentioned one other incentive. There was the tax abatement. What was the other one?
So tax credits. So
Okay.
Typically, if you can negotiate as the developer tax credits going into the project. So if you said, hey, I'm building a single family home, or I'm building a multifamily home, or whatever you want to build, you go and basically lobby for some tax credits, and instead of your cost being, call it $5 million to build, it's now $3.5 million to build, because the county has come up with $1.5 million of tax credits for you.
Really? And that comes straight off of your cost to build?
100%.
Wow.
Yeah,
that's pretty powerful.
It's crazy. I mean, it is the difference maker. And again, like I believe that getting people to have generational wealth, you need a house. How can we do that, right? The government is one way to have access to some money, some capital.
Yeah, I would say, like, right now, I think the number one way to solve the affordability housing crisis in a lot of these markets around the country is to build more supply. But unfortunately, with a lot of the bureaucracy and red tape in a lot of areas like California, there's some challenges imposed in there, right? And then also you throw in the interest rate environment, the cost to build, and the volatility in the marketplace. It adds a lot of risk for a lot of these builders. So I guess it's good to hear that there's cities out there that are implementing some pretty advantageous stuff, encouraging builders to get in there and build some more affordable stuff. Because, let's be honest, a lot of these builders that are building right now, most markets, it makes sense for them to build Class A, right? And so it's good to hear that there are some incentives out there for the affordable housing.
Yeah, and another play what we're doing is in the state of Texas is we're doing pad splits, right? So you've got a house that is a 3-bedroom, 2-bath. Instead of renting it out to a family, what we do is we carve out the living room, so it's now a 5-bedroom, 2-bath, and you can rent each room. Right. Again, most people would say that that's not a desirable situation. However, there are a lot of people that can only afford a room. And so we are getting in a position to save people who are leaving out of their mortgages. Right. So they're behind on their mortgages. We go in, we buy with creative financing at their same interest rates. We're doing they're loving us because we're not having their home go into foreclosure. And then we're dividing it and making it so the accommodations can accommodate 6 people in that home. And again, it's all affordable housing play.
Yeah, I first learned about pad split through Pace Morby.
Yeah.
And actually jumped on a couple calls with their team just to kind of learn about it. I don't have any properties that would make a good candidate currently. Yeah. But I do like the model. Yeah. And I believe they actually will furnish your place as well. Is that right?
So, I mean, and the furniture is minimal, right? So you got a bed and a nightstand and, so it's minimum. But yeah, absolutely. They will definitely help in that regard. And I think, if you look at the mathematics on it and the financing and the underwriting on it, if you're solely looking at just that piece of it, it makes sense as well, right? So the rents are, let's just say 1x. When you do a pad split, it's like closer to 2 or 3x.
Yeah, that's not bad. And then what's the average length of stay for a lot of these guests?
Yeah, so it all depends, right? It depends on, the person who's going through whatever situation, but some of them are, a 1-year lease, some of them are 1-week lease, right? So it all kind of ranges in that regard. But again, you're just trying to provide, a place for people to live.
Yeah. So this 2,000 lot acquisition is intriguing to me. What does the debt look like for something like that? You're going to do this big construction, this big development. Talk a little bit about the capital stack and kind of what that looks like.
Yeah, so we're going to piece it, right? So we don't want to necessarily do all 2,000. This is a 4 to 5 year play. We want to start off slow. We're going to do the first 22. But we've got about $4 million raised for it. We start with the first 22. We do the first 22. We see if it sells or how we're going to exit the project. Mm-hmm. If we want to exit the project, we don't really know yet. So that's all up in the air to discuss.
Yeah. Is one of your exit strategies to refi and rent these things out long term.
Could be, yeah, for sure. I mean, from a wealth perspective, that definitely makes sense. From an affordable housing and generational wealth, what we're trying to accomplish, I don't know. Mm-hmm. So it just depends. It just depends. If the market comes back, right? So if we're done, call it in 6 months to a year, and now the interest rates are a little bit lower, and some people can get into these homes and qualify for these homes, then selling them may make sense, especially if you're trying to do what we're trying to do.
What's the permitting process like out there, like timeline wise? Because I know here in California, they got the ADU stuff, which they're streamlining, but like I just got one of my ADU permits approved, and it was over 2 years. So I'm like, the ground up stuff out here can be 3 or 4 years, just with all the environmental and all the red tape.
Yeah.
I imagine Ohio's a little bit quicker. Is that accurate? If you are a busy professional and don't have time to invest in real estate, but still want to participate in the passive income and tax benefits, my team, Summers Capital, is buying a lot of boutique hotels right now. We source the deals, we renovate the properties, and we even do all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, go to summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show.
For sure. So we're building 10 single-family homes here in National City and Bonita.
Oh, yeah. Nice.
We haven't started yet, right? So we bought those properties or the land a year and a half ago, and it's still been this whole process of trying to get the permitting and everything, approved. Most states are not like California, right? So California is a little bit more difficult to navigate. Cleveland, the Midwest, even Texas is just a lot easier to push permits through. I think we're building a house. We just talked about it today. We're building a house in Dallas, Fort Worth. Permitting process is a month, right? Versus like a year and a half here in Southern California. So it's a lot easier to do it in certain areas of the country.
Yeah, it's interesting to me. I always go back and forth on my opinion on this. Like I like areas that are business friendly because I think it encourages business growth and employment growth, population growth, which is a good thing for real estate. But on the flip side, sometimes I'm like, well, some of these areas that have the bureaucracy and red tape, builders don't want to go there. And so if you own real estate in that area, it's like, well, you don't have to worry about a lot of oversupply or competition.
The barrier of entry is harder, right? Yeah. So that makes a lot of sense for sure. Yeah. Especially if you're doing what you're doing. Yeah.
And, we talk like with what we're doing with the boutique hotel stuff. Traditional real estate investing, a lot of multifamily and traditional long-term rentals, people like to go into these landlord tenant friendly states on the investment side. But and traditionally those are like more conservative states, red states, without the bureaucracy and red tape. But then with the boutique hotel stuff, like we're going into areas where there's tight short-term rental regulations or pending short-term rental regulations. And so those areas tend to be more of the blue states, where there's a lot of bureaucracy, red tape, and, a higher barrier to entry, if you would. So it's just interesting to kind of see how those two perspectives affect each asset class.
Your property, I just saw your property in Arizona. It looks amazing.
You saw it? Did you get a drive-by?
No, I didn't go by. I just saw it online, but it looks amazing. Did you guys have to pull permits? And I mean, what did you do to that property
so we did a full reno. So it's 1.3 acres. Wow. And I did like a 1031 exchange out of a deal into that. Okay. And so at the time I kind of knew my ability to buy. Yeah. And so I went out there and I toured like 17 properties all in Scottsdale. Wow. And that was like the best one in terms of like bang for your buck. Yeah. Had a great lot. It was surrounded by golf course. So from like a short-term rental standpoint, I love that. And then it had a really nice guest house. Wow. With the guest house had a 4-car garage. Oh, jeez. And that square footage in the garage was already like permitted. It had central air, had plumbing, electrical. Wow. And so we converted that 4-car garage into an additional like 2 bedrooms, a full bath, and a game
living
room.
Space. Yeah. Awesome.
So we didn't do in Arizona the permitting process is very quick and a lot easier. So we didn't have to go through all the same things that we would have had to do here in California, let's say. Yeah. So it was a relatively quick renovation. We were in and out, and I want to say like about 5, maybe 6 months start to finish.
That's not bad.
Yeah, not too bad.
Yeah, that's awesome. So, and is it cash flowing pretty good right now?
It is. So right now is the slow season.
Yeah, of course.
So right now, slow season, it will gross about like $30,000 a month. Okay. But busy season, that thing's doing $80,000, $90,000 in a month.
That's awesome. That's awesome.
Yeah, it's interesting because Scottsdale it's a very oversaturated market.
Yeah.
And so I think in that market, you got to bring a unique product to the marketplace if you want to do good.
Yeah.
That's
awesome.
I know Craig and Matt got some product out there, and I know they're bullish on it.
Yeah.
But to your point, it's like, dude, there's 6,000 short-term rentals in Scottsdale.
Yeah.
I think it's a great Airbnb market, but I never want to own a boutique hotel there.
Right. Yeah. Interesting. Yeah.
So
no, I like it, man.
Tell me about your stuff in Houston. You're doing you have some Airbnbs there that they manage?
Yeah, so we've got I would say there's about 10 single family homes that we've bought at the right time. We rehabbed them, and then we're short-term renting them. That with Craig and Matt, they are they take the wheel on that, right? So like, I try to be a inch wide or excuse me, an inch deep, a mile wide, right? So I know a lot about a little about a lot of things, but I turned it over to them, and they've been rocking and rolling on the design and how to bring in the best tenants and how to get your algorithm at the top and all the things that they talk about. But yeah, they've been managing those. But yeah, for us, it was just buying at the right time, renovating them, making them nice and in the nice areas of Houston, and letting them do their work.
Yeah. So you got the Airbnb stuff out in Houston. You're doing a development project in National City. What are you guys building out there?
So we're building 10 single family homes in National City. It's the National City Bonita area. I'm doing a JV deal with that, so my partner is running point on that. I just provided some capital for him, but I've been involved in the process of getting permitting and all of the surveys and the topography report and all of the stuff that comes with building in the state of California, and realize that it's a lot harder to build here than anywhere else, and probably will stick to other places in the country.
Yeah. I don't know too much about the permitting process in National City.
Yep.
It's interesting because it's kind of like its own little city, but it's right next to downtown San Diego.
Yeah,
really.
Yeah, right. The rules are in San Diego, I think, apply to National City. It's been a long and slow process to say the least. Yeah.
Yeah, absolutely.
Yep. Yeah.
So you're doing the Airbnb stuff in Houston. You're doing some development stuff, and then you got this massive affordable housing development project out in Cleveland. Where would you say you spend like the majority of your time?
Good question, man. So I'm all over the map. I would say that my heart wants to do more of the the give back, and my wife and I opened a nonprofit 4 years ago. We're putting Black kids through college. So it's called Black Future Foundation, and so raising money for scholarships is a huge deal on that piece. Obviously, GLH is evaluated at a $40 million company, so I just sold 10% of it for $4 million just here, and that took a lot of my time. But there's a lot of moving parts there. I've got some great people on staff. Vanessa, who is my COO, who just runs point on everything.
We got Vanessa sitting right here in the audience. Shout out, Vanessa.
Yeah, I've got Adam, who is running point on all of the acquisitions in Dallas and doing all the pad split stuff. I've got a partner out in Cleveland, Ron, who is running point on all of construction and all the stuff that goes along with that. So and then I'm a managing partner for Valhalla Capital, which is an organization that is trying to shake up the VC world. So
what's the VC world?
Venture capitalist world. So $333 billion was allocated in 2022. 99.3% of that went to white men. And so they've recruited me to be kind of the face of what an underfunded founder looks like. Because capital is, as you probably know, is hard to raise, and it's specifically harder to raise when you're a person of color. And so we are trying to change that. So we went to the UAE. We've been there a few times now. We've raised some capital from there. We've got a family office out of the UK, and then we've got a private bank that's out of Canada that we're trying to find underfunded founders to supply capital to. My specialty is real estate, so I'm bringing opportunity to them that are $100 million or more. That is the capital that is needed. So I'm spending a fair amount of time doing that. And then I sit on a couple boards and at the university club, I sit on the board there. So I spend a fair amount of time in various different places doing a lot of different things. So
yeah.
And then clearly the capital raise, right? So we're always raising, additional capital. Our fund, opened up 2 years ago. We raised about $7 million in that fund. I put $3 million of my own capital into it. We're always raising capital because obviously more capital we raise, the more affordable housing we can do. And so that's where I spend most of my time.
Yeah, I love that you're giving back, man, with your foundation, and it sounds like you enjoy just kind of giving back and helping others win too, which is rare. The world would be a better place if there was more entrepreneurs and investors that did that.
Yeah, I felt like it's my duty to, as I am successful and I've been able to be successful, it's my duty to give back to the people who are either less fortunate, don't have the knowledge, don't have the resources. If I can help them in any way I can, I will.
Yeah, absolutely. The university club, I know some folks that are down there. I've been there, but I've never actually attended any of the club stuff. I think I've just done a dinner there.
Yeah.
Right.
You should join.
What goes on over there? What do you guys do?
So I would say the university club, if I had to look back on, I've been a member there for 10 years. And now I'm
You're OG, man.
Yeah, really. And now I'm on the board there. I would say that most of my solid relationships have come from the university club, believe it or not. So I would say that there is a number of different networking opportunities that go on there. You've got, your young professionals all the way up to your retired, seasoned folks that are there. And I think it's a social club, but there's a lot of networking that goes on. There's a lot of businesses that take place that transact at the university club, and it's a great place to kind of hang out and hold events, and great date night place for me and the wife, and so it's good. Yeah.
Your wife doesn't say anything when you bring her to a networking event for a date night?
Well, I wouldn't still be married if I did that.
Okay.
But I definitely, you can go up there on a regular night, get a table overlooking the city. I think it's the best view in San Diego. And so, yeah, you can go up there and get a table and have a little date night and enjoy yourself.
Yeah. That place does have a great view.
Yeah.
I've seen it,
and Mother's Day brunch, and there's Mother's Day brunch, there's Christmas brunch, there's a couple things that my wife definitely likes to go to at the U Club.
I like that.
Yeah,
man, I agree with you. I think the networking events is a huge way to network with like-minded individuals.
Yeah,
especially if you're getting into something new.
Yeah,
whether it's real estate investing or just entrepreneurship in general.
Yeah,
and to also get around like-minded individuals that are thinking bigger than you.
Right,
I think it's huge.
I
know for us, we have a couple meetups, and I would say generally speaking, our meetups are. A lot of folks that want to be active business owners or entrepreneurs, real estate investors.
Yeah.
We don't meet a ton of more passive folks that want to be, passive investors at our meetups. But I made an effort recently to, try to get involved in some other groups. I just joined Fast Lane Drive not too long ago.
Yeah.
And, it's
Very
a pretty
familiar.
big group with a lot of folks that are in business, some in real estate. But, with our meetups, I would say most folks are out there because they want to get into real estate investing or they're doing it already.
Yep.
But I would say with groups like Fastlane, I would say 85% of those folks, maybe 90% are active in their prospective business.
Yeah.
That's not in real estate.
Right.
And so I think for, from a standpoint of meeting limited partners and being inspired by folks that are thinking bigger, I think generally speaking, I like to be in those rooms that are not all real estate investing,
100%. Well, I would say that, if I look at my portfolio of people that are investors with the fund, I would say none of them are in real estate. Right. So the person that I'm looking for is the doctor who is my neighbor, who is an orthopedic surgeon. He's working 60 hours a week. He doesn't have time to think about real estate. Right. So he wants to be able to give you a $200,000 check. You go and grow it. And then you come back and tell him everything went well. He doesn't have time to do anything in real estate. So that's the goal. We're looking for a very passive investors that have money, that want to put it to play in real estate, for affordable housing. That's who we're looking for.
Talk a little bit about the return profile as an investor in your fund. What does that look like?
Yeah, so it's a 9 to 12% return. It's our fund is. I've been involved and sat on the sideline of a few different funds. I think what is unique about ours, obviously, the return on investment is pretty good at 9 to 12%. Or at least that was good, 2 years ago. But we're minimum investment's $100,000. I've seen funds that are, that are minimum are $1 million, which, I want to be able to give the accredited investor, an opportunity to dabble at $100,000. What's also unique about our fund is that you can get out with a 60-day notice. All right. So,
That's pretty liquid.
It's very liquid. So you've got, a 12-month hold, but then after that, you give us 60-day notice. We'll cash you out on the next deal. And so it's a great tool to kind of grow your wealth and not have to think about it. What I also like about it is that, it's diversified, right? So we're not just in Houston and Dallas or in Texas. We're in, 7 states. We're doing, these projects, on a different scale all over the country. And so I like the ability to be able to be, if something happens in crazy that's in Indianapolis, it doesn't affect the fund. That's, because it's so liquid and it's so diversified. So that's the fun, but it's been going for a couple of years now, and we've got another 2 years runway of raising capital, and then after that we will probably refund everybody's money and see what else is next.
I agree with you with the fund structure. So up until this point, I've done some single asset syndications. And it's great, but it's like, you got one asset, you got one set of investor, one set of reporting, one set of accounting. And then once you have 3 single asset syndications, well, now it's like, okay, you got 3 assets, 3 sets of reporting, 3 sets of accounting. And so the workload goes up, right? But with the fund model, it's like, dude, like this is our first year doing a fund, and it's like one set of investors, multiple assets. The investors are diversified across multiple deals, so it takes a lot of risk off of their
100%,
plate.
100%.
And so they like it. And then also they don't have to evaluate each deal and determine, okay, which one am I going to put my money into?
Right.
They can just put their money into one fund, and now they're diversified across multiple deals. And then from an operations standpoint, it's like one set of reporting, one set of accounting, one set of distributions. It's a lot easier. And then it takes a little pressure off of us as well, right? So, if we got 4 deals in a fund and let's say 3 do really good and one maybe falls a little bit short of expectation, well, the blended return is still going to be nice and healthy.
And I've seen that, right? So I've seen where, you've got 2 funds, one does really well, one doesn't. And so the people that are invested in the one that doesn't are pissed, and the people that invested in the one that does are happy. I don't like that. I want everybody to have the same return, and if I got to eat a little bit of the return, that's fine.
Yeah, I'll give you a good example of this, and I'm going to actually fly out to Houston to do a podcast with him, get him on the show. But Robert Martinez, the apartment rock star, an article just came out a couple weeks ago, but this guy's got about 4,900 units in Houston. Yeah, all of his deals to date have been very successful, but he bought a deal early 2022. Multifamily deal with floating rate debt. And this article just came out 2 weeks ago that the lender's going to foreclose on him because obviously the rates have gone up. His debt service has increased dramatically, and he's not able to refi into fixed debt without bringing considerable money to the table. He's like, dude, I'm not going to go do a capital call with my investors to bring him into a deal that is kind of stagnant right now. So he tried to work out some things with the lender, but they wouldn't work with them, and they're actually going to foreclose on this $51 million multifamily loan. So I say all this, and I'm going to get him on the show, and I want to get his side of the story.
Yeah, for sure.
But I say all this, and like he did, 11 to 12 syndications to date, very profitable with all of those, and then he had this one. So if that was a fund, right, the blended return would still be in the green, But unfortunately, the investors in this deal, they're going to take a bath.
Right. Yeah. So then that brings up another topic. What do you do when that happens, right? So if someone's taking a bath on it, do you refund everybody's money and just hope for the best, or what do you do?
I don't know. That's why I'm gonna fly out there and ask him. I'm gonna ask all these
Let
questions
me know what he
because
says.
I'm curious too.
Yeah, for sure.
So it'd be interesting, but I'm curious. So, you have this foundation and
Yeah.
you're helping young Black folks that don't even know maybe investing is even a possibility or entrepreneurism. What do you tell those younger kids that maybe don't know this is a possibility?
Yeah, so there's a twofold, right? We're helping them get through college because, as I shared with you earlier, from the ages of 18 to 22, there's more African American men in jail than there are in college.
That's crazy to think about.
And
I would have never guessed that.
Yeah, and so we want to change that, man. So, in our nonprofit, there's two sides. There's the financial side that we're trying to get them to and through college, but there's also the financial literacy side, right? So it's amazing to me that no one talks about financial literacy from grade 0 to 12. You go to college. I was a finance major. People still don't talk about financial literacy, right? How do you balance a checkbook? How do you pay your bills? How do you save? How do you invest? It's just not taught. Unless you have a mentor, and unless I'm a prime example of someone that quote unquote made it. I'm 25 years old. I'm working this corporate America job. I'm making $400,000 a year. I think the world is going to continue to be there forever. So I'm blowing the money, right? And it wasn't for my mentor that pulled me aside and said, hey, why don't we save some of that money? You don't need to go to Vegas every weekend. Let's go to Vegas once a quarter. And if it wasn't for him to kind of reel me back in, who knows, right? But again, like, no one talks about financial literacy in our circles, right? So it is up to me and the people that are on our board for Black Future Foundation and all the people that volunteer for us to educate these people about financial literacy, how to save money, how to buy a home, how to invest in stocks, bonds, mutual funds, real estate, whatever you want to do, but how to do that.
Yeah. And to be quite frank, like, I'm not Black, but I didn't know that was a possibility either.
Yeah.
And I think, I believe a lot of, you got three things. You got the central banking system.
Yeah.
You got Wall Street.
Yeah.
And you got the federal government.
Right.
And I think, they are incentivized to breed middle-class people.
Right.
So I was taught from a young age to go to school, get good grades, go to college, get a job.
Right. Right.
And when you breed that type of mindset,
yeah,
those three pillars win.
Yeah, for
right?
sure.
And then they tell you, play it safe, diversify, invest in your 401k. Well, that's cash flow for Wall Street in the form of fees.
100%.
But also, every time you make a contribution to your traditional 401k or IRA, you're not only investing in your own retirement account, but you're also investing in the government's retirement account, because at age 59 and a half, they're going to take their slice at a number that they're going to dictate, right? So we don't know what the tax rate will be then, but all that investing, right, is going to be taxed as ordinary income at age 59 and a half. And if I'm a betting man, the tax rate is going to be higher 30 years from now than it is today.
Yeah,
I mean,
100%.
if you look at the history of income taxes, they usually go up.
Right.
Yeah. And so I believe that the government is incentivized to breed middle-class people, which is why I believe that, unfortunately, a lot of like younger folks growing up are not exposed to, real estate investing and entrepreneurism. Yeah.
Well, shit, man. I mean, that's a big testament to you and what you're doing from a podcast perspective and just getting the information and the knowledge out there, right? I mean, that's key, right? Just knowing that it's a possibility makes it a possibility, right? Mm-hmm. So I think it's kudos to you for doing this podcast.
There's a whole other ball game out there that I would say 85% of folks don't even know is there. I didn't know it was there until like my young 30s.
Yeah. It's walking in the Matrix, man. That movie has a very good correlation on how the world is viewed, right? Being on corporate America side and having people think that I was absolutely crazy for walking away from a corporate America job, cushy, great benefits, 401k to go start my own real estate company. I thought that was just the farthest thing from reality. But the reality is that when you look at your W-2 income and you're making whatever you're making and the government's taking half, and then you're in real estate and you have options with that income, there's just a lot more money to be made, and so we're happily doing that.
How do we fix that? I guess lack of awareness or lack of just knowledge to even know that this exists with the younger generation.
I don't know, man. That's a great question. I'm not going to sit here and act like I know, but I would say, just to your point, I think that there is a reason why. People are told what you were told, what I was told, just get to college, just get a job and pay your taxes. because it incentivizes those three pillars. So getting people educated on outside of that, I mean, I think it takes things like podcasts and, luckily now in today's society, there's the internet, there's YouTube, there's all these videos, there's posters, there's podcasts that can educate you. And, again, I would just we encourage all the people that have come through Black Future Foundation to just look around, be aware, read. Rich Dad, Poor Dad is your first present when you graduate from college. Like, just think about it. You don't have to do it, but just think about it.
Mm-hmm. The crazy thing to me is like people spend, hundreds of thousands of dollars to go to college and get all these degrees. Yeah. And that stuff's hard. Like doing calculus and chemistry and all this stuff is like, that's not easy.
No.
But, a lot of the stuff that we do with real estate and, building businesses is like, a lot of it's just simple math.
I know.
And like you could teach a lot of it to like a 5-year-old.
100%.
That's the crazy part to me, right?
Well, if you think about like just real estate in general, you buy it low, you may renovate it or not, but if you do, great, and just keep it. Like that really is, I've talked to billionaires that have just had that formula of we're going to buy real estate and we're never going to sell it. Just do that. Really just do that. And it doesn't have to be on that grand scale. You don't have to go out and find a fund. You don't have to raise capital. You have to do all those things. Just buy your house, right? And then maybe buy another one or buy a duplex or a triplex. Like those things are not hard math. Like they're not calculus and chemistry. It's pretty easy, but a lot of people don't do it.
So for a new real estate investor listening right now and they want to get into their first deal or two, do you suggest they go into affordable housing?
I suggest they find a mentor. I would suggest that they find someone that has been doing it and then do it with that mentor or copy what that mentor is doing. I think that there is 1,000 ways to skin a cat in real estate, right? If it's hotels, if it's affordable housing, if it's mansions. I've done a lot of different things. We've made money on all of them. So I don't necessarily think that, if it's not in your passion to do affordable housing, you don't have to. You can do whatever you want to do, but getting into the game is just the starting point.
Yeah, I agree, man. There's so many different ways to do it, and there's no right or wrong.
No,
but it's like pick one and figure out a way to get good at that one thing before you move on to the next. Yep. I feel like I see too many people jump from thing to thing every 2 months, and they never get good at anything.
Yeah, Yeah. Very true.
Well, dude, I appreciate you coming on the show, man.
Appreciate you having me, man.
I'm impressed with the dressed to a T with the black on black, man, and even more so inspired by everything you're doing.
Yeah, man. Appreciate you having me. Appreciate what you're doing, and blessings to you, man.
Yeah, likewise. Listeners, thanks for tuning in. We'll see you in the next one. Peace.